All righty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great day. We got a little bit of movement from the sorry. Oh, you know what? I just realized. Hold on. Sorry, 1 second, guys. Okay. Sorry, guys. You know what I just realized is, well, we got a little bit of movement following the CPI, bounce back in equities. So not overly convinced about anything at the moment. You can see the dollar index is just still sitting here in the wedge. We popped up, pulling back a little bit. Nothing, says or screams to me that we need to be extremely bullish the dollar yet. But notice how we just continue to put pressure on that 94.50 level. So that's so that's what we're seeing. Hey, by the way, I just want to let you guys know the morning edge today is only going to be myself. Stelios will take you for a few minutes after I'm done. Steve had they have scheduling conflicts right now between him and his wife. If you guys don't know Steve, his wife is her profession really is very demanding. I could let him inform you what she does, but she's a professional that works 14-hour days. So in a very demanding profession. So they're having some scheduling conflicts right now because of one of her work I guess we could call it a project, but it's really more of a case. But anyway, so for that reason, Steve's not going to be here today on the morning edge. He usually is, but they've got to finagle their son situation, which, if you guys have been a parent, you guys know it's like a lot of times you have to tag team with your spouse to make things happen. So, okay, let's go back over to the dollar index. Let's kind of just talk this out. So obviously support is now 94.20. I mean, we've been writing this trend line as it's moving higher, but we really got to reference this hourly low here. And I'll just put 94.20. Oops, shoot, where's my bias chart? I'm going to put 94.20 because I think that that's going to be relevant for today's market. Okay. And you can see this range is tightening up. It has to stay bullish while we're making higher highs or higher lows and consistent highs. So, and I'm going to write down 94.50. But just in case we break out, just in case that the market just says, enough's enough, we get this breakout, we have to reference 94.75 because that is 127% extension of this move. Also, if you go back to last year, let me delete, or I just want to move that for a second so you can see it. Going way back to, this would be September 20th. The high was 74. So we actually have to take that and go like that, right? Okay, that's 94.74. So that's why 94.75 is mega resistance. So just because, or if the dollar breaks higher, don't go, oh, it's breaking out. It broke 94.50. No, we've got a little bit more work to do, but I think it gets the 94.50 is obviously the big 38% retracement, right? So spike low here is 94.65. So you can just see just huge resistance around here. And that's why we need to be really careful, because if we start breaking higher and we start clearing 94.75, I would not want to be short the dollar at all whatsoever. Right. Okay. Continuing on. Let's get through these charts. Here's the euro. Euro continues to trade heavy. Every day we just, briefly make a new low. And it doesn't mean that, the euro is just going to capitulate to 114.50 today. It's just the euro just continues to grind lower. We're having this conversation about in the chat room about the dollar. And so here, let me give you guys this conversation. I want to have this conversation with you all as well. How many of you are just not in the chat room? You're not in the chat room, so you're not able to view it because you're not on the you're not in the chat room. Some of you, okay. Okay, hold on. Let me grab this, because I want to grab this for you guys and have this conversation that I think is important. Okay, there it is. So I've from multiple sources, not just one person. This is just one person's, CFTC, like their little chart, some email I received this morning. I'm like, I've heard this pretty much nonstop from people for the last 2 weeks. Oh, the dollar is lopsided. Oh, look, the dollar, commercial, dollar long, everybody's long the dollar. It's the boat's too crowded. I'm like, really? Oh, sorry, getting my coffee here. Really? So you're going to tell me that the dollar is lopsided right now, and it's going to reverse because the positioning is too strong for the dollar at the moment. Now, I'm not saying that can't work intraday and maybe for a day or two, but here, let me grab the drawing tool. Annotate. Here we go. Can you guys see how, this is, by the way, these are years, 16, 17, but just on this chart, this is just a chart I got this morning. That's why I'm, those are years. That's positioning over the course of a year and a half. So if we just went bullish the dollar and people are net long the dollar, do you think it's going to end after a couple months? Is that the deal? Do you think dollar positioning over the course of a couple weeks does this? No, it doesn't. And another point that K-Man, by the way, K-Man in the chat room, he's I had an opportunity the last couple of days to meet with K-Man personally. Great guy, super knowledgeable. I mean, he's been a trader at several major banks for the last 40 years, traded for Citi, and when somebody's been in the FX business and been on a trade desk, a big brokerage firm's trade desk for so many years, they've got some knowledge, and K-Man's one of those people. So I'm really, really happy to have him in the ForexAnalytix chat room now. But we were having this conversation, and it's a conversation I commonly had with the guys over at the Gelos office when I was trading with them. CFTC positioning is not what it used to be. There's so many more methods and ways that institutions take and express their dollar positions. This is just a very small metric now, not like it used to be. So, not like, 20 years ago, where you could look at CFTC positioning and go, well, that, there we go. That's the whole reason why the dollar is doing whatever it's doing. So this is just a small piece of the pie right now. And then the other thing I have to, again, just reiterate, when positioning goes bullish or bearish, you can see they last for, a year and a half. I mean, it's very rare that you'll get this flip-flopping of positioning. So, to say that the dollar is, very, very, lopsided in its positioning, I just do not agree with that. Not right now. I believe that I personally believe that, let me delete. I'm trying to delete the annotations here. Oh, there it is. Delete all, clear all drawings. Okay. So what what I'm trying to tell you guys here is I think that the dollar can continue. It can continue moving. All right. So just in the current direction. I don't think that the dollar's got a lot of upside though. Personally, I mean, I'm just telling you guys how I feel. I still feel that the euro, might get to 114.50. Maybe we trade down to 113, depending on what happens with risk appetite. But I'm not looking at the euro thinking, oh, here goes the euro, it's going to go back down to parity. I'm not in that camp. Not right now. I'm not saying that can't happen either. I mean, we'd have to have some pretty severe risk aversion for the dollar to move in that fashion, I think. But I think for right now, we've got to really continue to focus on the dollar strength, and the dollar trades well. The euro trades poorly. Okay. So right now, this where we're at, this 115, you can see this 127% extension is just being probed and it's holding. But, I really think that a move down to 115 today would offer some buyers. So should we get down there? Resistance continues to be 116 and then 116.50. While we're below those levels, you have to remain bearish. Okay. Sterling's getting a little bit of a bounce, but is it, has it gotten above? I mean, when do sterling bulls get a little frustrated that we haven't gotten above 136.65? Even after all these very hawkish comments, why isn't the sterling like, trading at 138 right now, 140? Why aren't we up here after all those? Oh, wait, the Bank of England's going to be raising rates, and why is the sterling down where it's at? I don't know, but I'm trying to point out that it's not rallying. Is that a product of the dollar, or is it a product of or just a product of the sterling? I mean, I don't think it's the sterling. It's probably more dollar related than anything. But 135, have we been writing down 135.20? Is that what we've been writing down? All right, let me get back over to the 4 hour. Yeah, I think we've been writing 135.20, 135.25, something like that. And speaking of which, let me just check something really quick. I mean, 135.12 is actually the 618. So, which is actually that spike high. That's if that level holds. So just something to keep in mind. Okay, Aussie inverted head and shoulder pattern points to 74 right here, 74.78, right? But I think that is going to cap us. But that comes in at 74 cents now. But who's talking about the buts? 72.90 is really support for now. And while we're above that, we have to imagine that we should see 74 cents. That doesn't make, this doesn't make me like, this doesn't make me like bullish the dollar. Like overall, I think we're still ranging But I think that right now we have to just think that the dollar is still, holding up pretty well. Wow, nice reversal in the euro. Look at so the euro, which was just trading, and this is here's intraday. It was just trading at its lows of the session of the European session, spiked to the highs of the North American session. I mean, and then probably what it's going to do here, I'm just thinking out loud, it's probably going to, take everybody's stops that were short, right here. I'm not trading the euro at the moment. And then, come right back down here. It's just, it looks like a kind of messy, right? Kind of messy. All right, let's go over to the Kiwi. They all look like that. Resistance 69.90. Support. That would be okay. This is a daily chart. So if you go over to, you look at the 4-hour chart, we have not been below. Let's just call it 69.10. Michael said dollar wins in inflation or stagflation. I guess sounds good for stronger dollar. It looks like it's good for stocks too. Stagflation, who cares? Let's buy stocks. That makes sense, right? It's funny, the stock market, just if you guys haven't noticed this recently, we rally in the mornings, but in the afternoons, guess what we do for the last week? We sell off into the end of the day, right? Yeah, Gavin says we close at the lows. That's not bullish price action. That's the exact opposite of what we've seen over the last couple of years. Usually, you close, you open lower, and then people fill the gap, and then the stock market just grinds up higher by the end of the day. These days, we've seen the opposite price action, rally at the open, and then we just spend the rest of the day kind of grinding lower in risk. Is that seasonality? I don't know. Is it a change? I don't know. But I think we have to be aware of it because it's catching the, buy the dip crowds off guard every day. The Pavlovian response isn't working as well. And so that's change of behavior. Any which way you slice it. Dollar CAD. So this horizontal support's really important. Nice. I say nice. I was telling the guys and gals in the chat room here, let's, just chat room conversation so you guys can, see my chart from earlier this morning with the Canadian yen or dollar CAD, sorry. My comments regarding that chart that you see here is that I'm not in the bearish camp. We're going down to, back to 120 again. I'm not in that camp, I don't think that that's where the dollar Canadian's going, but I do believe that, the market's pretty bullish CAD at the moment. And so, we have to be really careful that, if you're and I'm not trading the dollar CAD, I'm just giving you guys my opinions here because I know a lot of people have been trying to buy it down here, but how many stops are building below this level support here? I mean, look, if I was going to buy the dollar CAD right now, if I was going to buy the dollar CAD at this moment, I would say, okay, I'll buy the dollar CAD and I'm going to put my stops below these lows. That's what I was going to do, right? Because that's the risk reward. I just don't know if that's the right trade. My opinion is stops could be building through here and we would just do one of these. Sell off. Sorry, let me sell off, break new lows, trigger those stops, and then reverse. So if you guys want to be long the dollar Canadian, the way I'm seeing it is, buy a dip below 124. If we get there, that's 70 pips away from right now. It's possible. It is possible. Okay. Right now, 124.20 is support. And then below that is 123.80. And I think that's actually key. I don't know if we're going to get down there, but that's where I'd want to buy a little bounce trade right there. And we have to get above this. Well, we have to get back above 125 in order to take this downside pressure off. So we'll see if that happens, but that needs to happen. Okay. Swissy still stuck, but look, we're probing support. We get below 92.50. Things are going to turn. I'll flip this right to bearish if that happens. Well, I don't know if I want to go bearish, but anyway, coming out of the triangle, if we come through 92.50, we should trade back here towards like 92. Resistance is 93.40. Dollar yen or dollar Norway. Bearish wedge. I mean, I'm long. So, but there's a good chance since we've got consistent lows, lower highs, that we do one of these. Right? So 840, I'm going to write down 847 is possible, especially while we're below 865. Aussie's at highs. So Aussie has had and it doesn't seem like a lot, but it is because we haven't seen a lot of volatility the last couple of days. It's had like a 35, 40 pip bounce this morning. I mean, so, it's not a huge move, but I guess in very low volatility environments, like, whoop, this is a really good example of catching people probably shorted today, right? So they got short following CPI, and now they're getting squeezed out. That's what's exactly happening right now. Okay. Dollar moving right along. Dollar MEX. So the 618 retracement of this move, this is this move right here. That comes in around 2062. Resistance is 2090. So that's significant. This is bullish. I mean, dollar MEX is holding up really well considering. Dollar yen showing a little bit of weakness here. This resistance, that this blue line that you see here, is a 2020s high. It is I'm sorry, 2018 high. So that's holding for now. Support will be a 113. Resistance is at 113.80. And the dollar yen is bullish. Dollar index probing support here. Look, big rejection. We're at the 618. So below 94.19, we'll put 93.95 in view. So 93.95. So we gotta mark that up because the dollar index just is probing that support right now. We have to be careful with the dollar. Just because, look, if equities, here's the S&P. If equities get back up to 4,400, the dollar index is going to slump back down to 93.50. My opinion. That means the euro is trading back at 116, right? I mean, that's entirely possible right now. So, speaking of which, trend line resistance. I mean, this is just going to be 44.20, 44.30, but all right, 44.30, 618's holding. So that's going to be 43.25. So 43.25, 44.30, and we are in a range. Well, you know what? I mean, I have to still have a bearish bias coming out of this, coming out of the ascending wedge. I have to keep it with a bearish bias, but I think that from like today, like we could do this and I wouldn't be surprised. We could do this and I wouldn't be surprised. So, I'm not looking at the S&P going, oh, well, we're definitely, going higher today or definitely going lower. I think anything can happen from current levels, but I have to have an overall bearish bias coming out of that wedge. Okay. Gold, look at gold and silver. Did they reverse? God, they did. I mean, look at this. Gold was following the CPI, gold slumped, and then it just ripped to new highs, and now it's pulling back. I mean, how annoying is that? 1780. I'm going to write down 1780. Well, it is 1780, isn't it? I mean, here we are back at the neckline. I'm surprised that this move has happened. So 18, I'm going to write down 1786. Okay.
Basically, yields are falling. I think that's what's driving it.
Yeah. I still have to have a bearish, but thank you, Stel. I have to have a bearish bias while we're below 1800, but I'm going to.
I agree with that, actually.
What's that?
I agree that they it hasn't, as long as it's trading below that, it's not bullish. Bullish in the medium term, but in the short term, it's not.
People are just getting. I mean, look at today's price action. This is whippy price action.
Yeah.
Because I was looking at it following the CPI, and I'm like, okay, well, there we go. And I said in the chat room, I'm like, bull's disappointed again, but I didn't expect gold to just rip like that. So yields are doing what?
Yields are falling. 10 years, 154, is it? Last time I checked, 155. So they're falling a little bit. Hunting for the weak hands. Yeah, that makes sense, Dom.
Yeah.
I bet a lot of people got taken out on that move.
Yeah. I mean, well, and you look at the dollar, the Aussie was at lows, just ripped to highs. Now it's pulling back again. It's like, people are getting whipped around this morning pretty aggressively. So, anyway, just food for thought. Let's see. Gold 1720. Silver, I guess we got to write the same thing as we always do, right? 23, 22, 21. Let's take a look at silver. And then I'll wrap up with the with Bitcoin. So now 23, we've been marking that up as resistance. 2302 is a 618. Here's I guess we should probably get a little bit more granular now and say 2320, because I keep writing 23 just to kind of keep it a roundabout number, but it's actually 2320 is important. these spike highs right here. So this is going to be, as now we're starting to get a little bit of volatility, we should probably just mark that up, right? So this is where it's important. Then above that, previous support, this descending trend line, okay. But I'm I'd be more concerned with like this 2320 level or 2315, but support still 22, which will be, this is 2190, this is 22. So I think that'll offer dip support on dips. I'll just go again, more of a roundabout number. Let's take a look at Bitcoin. So Bitcoin's struggling as we're at the top of this channel. 58,000. I thought 59,000 would be resistance, which I'm still going to write, but we might be stopping shy of that. By the way, this is still bearish too, even though we're up this morning. Bitcoin, could, just like we did here, if you think about it, here's the high, right? We did a little dip into new highs, right? We could dip, new highs. So that could very easily happen. So that's why I don't want to say, oh, 58,000 is the resistance. I think channel resistance is at 59,000. I do think support is at 51,000. That's got to hold any dip. So, and it's slightly trending higher, but overall, I mean, it's hard for me to get really bullish Bitcoin when we're just, looks like we're bouncing around between the 25,000 and 60,000 range. Yeah, I mean, I guess you could be bullish while you're in this channel if that's how you want to approach it. But I'm going to keep it in range. All right, so there's your bias chart, and Stelios is here. Steve is not going to be here, as I mentioned to you.
Yep.
And yeah, I told everybody, Steve's wife is a pretty intensive profession that is very demanding. So,
Yep.
these evening times with kids, it gets challenging because he's got a son now who's now doing extracurricular activities. He's not a baby. He's not he's now a young boy, and you got to keep those kids busy, and because you want to wear them out so they sleep.
Yeah, I know. I'm on the same boat, and I have 2 kids.
Yeah. So
they're near me now. So if you hear any background noise, it's them. Anyway,
yeah, I mean that's what happens.
I will take over and have a couple of things to talk about.
All right, sounds good.
All right, let me share my screen.
Chad wants to hear about URA.
Hooah! Yes. I have
that was a Cayman call, right?
It's the Uranium Etf. We've been talking about it with Cayman, and I've been talking about it here for a while. I have unfortunately, I don't have a big position at the moment. I had a very small one, but still, it's there. It was up 11. It was up 11% yesterday. Nice. That's why he's asking. Anyway, we'll have a look at that as well.
Nice.
So let me start first of all with the.
I'll see you guys in the chat room, by the way.
Yes, Blake. Thank you.
All right. Thanks, Del.
Thanks. So I'll start with DXY, and this is what I had drawn quite a while ago, and that I still think this is I think this is what's probably going to happen. The question is, what's the market pricing, and what's going to actually happen? And what is a market pricing? We're pricing a taper, or almost pricing a taper, because the Fed is telling us that they're going to taper, and they're telling us that they're going to be done by the end of the first half of 2022, and then they're talking about considering hiking. So the question is, what happens if this doesn't materialize? Obviously, the dollar will go lower. What happens if it materializes and they are even more aggressive? The dollar goes higher. It's basic. It's economics 101. What I think is that the market's already pricing quite a bit. I think that it's probably going to get a little bit disappointed by the Fed. I know a lot of people disagree. I think the taper is going to start. It's going to be slower than markets expect. There's always going to be some kind of excuse, and I think in the medium term, in a horizon of a year ahead or 2 years ahead, the dollar is going to be lower. Clearly, it can rally before that, and I don't see why it couldn't get to 96-ish. Which is a 50% retracement. It's also those lows, twice these lows, 3 times, I think. So it's a pretty big area, this 95.5, 96 area. Dollar bulls are going to be looking at that. If anybody wants to get short, I think that's probably a really nice level to get short. We're not there yet. Obviously, we're not close, but there's a good chance it might get there. But again, we're going to be depending on the Fed, what they tell us, and what they actually do, and also we're going to depend a lot on inflation, because really that's the main issue that the Fed is facing. And today was a good example. We had inflation, which basically came in as expected. And what does the market do? The market rallies. So stocks rally, metals rally, the dollar falls, yields fall, which means that the market is really anxious to see inflation coming lower. And so that's what I think about the dollar. And then another interesting chart is oil, which weekly, there we go, yes, which I had drawn this zone again a while ago. I mean, this is a chart that goes back 10 years. And we've just broken above this zone, and everybody's now bullish oil. Everybody, or not everybody, but a lot of people are talking about, $100 oil is a sure thing, or it's going to happen for sure. I think we're probably going to see a correction from here. And we talked about producer hedging as well. That's going to happen for sure. I mean, if it's not already happening. And I think we'll see downward pressure on oil. But as long as these supply chain issues continue, oil cannot drop significantly. So I think we might be in for a little correction, maybe back down to $72, $73, and then we resume. But oil has been probably the most volatile instrument out there, apart from cryptos, which are usually crazy. The pound we talked about on FA.C.E. This is what I had drawn a while ago. I still think it's happening. Okay, I didn't get the timing exactly right, but I still think we're going to see 83 handle, and that's where I'm going to start getting long and accumulating longs, because I think the markets are now starting to price a little bit more than what's going to happen. We're pricing a 15 basis point hike in December, and more starting to get priced in early 2022. And you know what the Bank of England is like. It's slow moving. Central banks don't really want to tighten, although they tell us, oh yes, we want to control inflation. They have a preference to, or at least it looks that way, that have a preference to stay with the relatively easy monetary stance. And so I think we're going to see 83s, and once we do that, I'm going to start accumulating longs for another move back to 90, maybe even beyond. Yields. I've been talking about yields for a while. We are still in a pretty massive channel from 25 years ago, whatever it was. The moves we're seeing now is, if you look at the weekly chart, it's just noise. And as long as there's no proper breakout, I don't trust any of these moves in equities or anything that's risk assets that are influenced by yields. And the S&P, I'm only interested if it breaks below 42.50, 42.40. If it doesn't, then I still think we're in a bullish trend. End of story. And that is probably going to be accompanied by a rise in yields further. I think 10-year above 170 is probably going to do the trick, and we're probably going to see this break. So equities, I still think that we're in a slow grind higher, after this big bounce following COVID. I just don't see what's changed. And you know me, I'm not a day trader. I look at more long-term trades, and nothing's changed for me. Now, our friend asked about URA, which is this Uranium Etf. And look, We had the spike. We got to this zone. We're back in it now. I have a small position. I'm just going to run that. I think this as an alternative energy source. It's green energy and all that. It has a lot of potential. There was an article about a big fund getting into it. I can't remember which one it was. And of course, Eric Sprott has done an ETF which actually holds physical uranium. I don't know how they do that, but so basically, there's a lot of players who are coming back in, and I really do think that this is going to eventually break. I have a small position. I wish it was bigger. I want to add on if we get any kind of retracement back to the 24s, I want to add more. But this has been very volatile. Yesterday was up 11%. So for those who follow it, it is a pretty tricky one. But yeah, as I said before, we're now into this zone, which we might see some kind of a rejection. We're either going to break. If we do break, I'm adding up here, above 29, maybe 30, because the upside is theoretically is massive. I don't mind if I lose 10%, 10% of upside here, but ideally, I'd like it to come back towards 24.5-ish to get some more in. And that's pretty much it. Now there's somebody, let me see, how can I see that? Q&A, no. Chat, no. Okay. Yeah, that's all I had to show. So how do I get rid of this? Damn it, I don't know this. That's all I had to show. So we'll
Thanks, Del.
We'll see how it goes tomorrow, and we'll see you, Blake, on the daily roundup.
Yeah, we'll see you on the roundup, and thanks for being here. Thanks, everybody. Have a great day, and I'll wrap this up.
Thank you, Blake. Thank you, everybody.
Bye-bye, guys.
Bye.